This is Terrence Andre Banks coming today from Information Age Financial Solutions, throwing in my 2 cents about housing and fear of missing out. And when I mean housing in this case is real estate and real estate investing, just focusing on that. And some of the things I see that people are just not aware of when they're utilizing hard money. Well, let's first discuss the first thing, the fear of missing out, especially the time where everyone's talking about housing crashing or interest rates going up. And if you're coming into this and you're thinking that, hey, this is a good time for me to start to learn how to invest in real estate, and I'm going to get my experience, get my feet wet, trying a deal or two, and a lot of conversations go on like that, especially where places of outings or where you're dealing with new people, and everyone seems like they have the answer for you, and if you could just get started now, I would put a sign of caution, and I would ask a couple questions. Anyone telling you this is were they able to operate in 2008 and prior? See how long their experience is. And what I'm saying here is that get as much education as you possibly can, but do not fear missing out. Do not fall into that trap of fear of missing out, especially when times are this tumultuous and you got the stock market going down and so much talk about a housing recession. Why I say this is because a lot of my conversations about people who are newly starting to get into real estate, I encourage anyone to do that as a long-term process for you to gain wealth and learn something with something more tangible. The problem is that we have a society who's become lost out the ability of work, study, and then seeing results. As well as when you're in an up market, no one seems to have any losses. So when you're listening to anyone or anyone presenting you a deal on that basis, ask them what did they do through the 2008 crash. And the reason why I say that is because a lot of investors, including myself, were deeply affected by that. It was the greatest, and I did my first real estate deal in 1999. But experience in 2008 it changed my life. Got me in a complete path of financial education, and finding out all the things that I was arrogant about, and how I didn't understand macro and micro interest rates, and how I was unaware of those different things and how that affected me. And again, I had a great track record of operating without loss until 2008. And I remember that this day distinctly because of the Lehman Brothers crash, and I had 3 contracts that didn't go through because the banks decided to cut lending. And so my potential buyers, and I was holding those properties longer because real estate was going through a slowdown. Slowdown, to say the least, it was going through a crash. And I had to learn that the hard way, as well as renters skipped out and I had to pay it. And there was no PPP loans, and there was no loan forgiveness at the time. It was a really different time economically. Will those times come back again? Let's say I don't know what the government would do. I'm so surprised that they gave it out so much. But I do know that things can't last forever, and upward markets cannot continue like this because people they can't perform housing, buy housing. And I say all this is because it's the time we're in, and just throwing my little 2 cents in. Just beware of that, be cautious of that. And many people who are claiming this, they've really had their start in terms of real estate and housing only through an upward market, and that was after 2008, 2009, 2010. So they started then, and they're going to see an upward trajectory because it kind of bottomed out around 2010, 11, and the market just kept going up and up and up, and even still today, we're still going up. But with so much talk about recession, housing becoming, having a crash, thought I'd throw my little 2 cents in for any new person who's getting started and talk about my own personal experience. Secondly is my operation at working in hard money as a project manager. And some things I see for new borrowers are coming out who really don't understand how the hard money loan works, especially if they're doing a renovation. Many people think because the loan may be $100,000, but they only utilize $20,000, that they're going to only be charged on the $20,000 once it comes to that point. No, any hard money loan is based on the total amount that you're taking out, and that includes your construction funds. And so even if you do not utilize them for the time, you're still being charged in the total amount. And those points still kick in and the interest rate still kicks in. And I say this because I had a couple of calls and conversations, lasted a lot longer than I thought it would be, because usually the contracts pretty much stated out that you're being charged for this. Many people are still unaware, I should say many, some people are still unaware of how hard money loans, especially if they're doing a construction loan and not finding out that you're being charged on the total amount of the loan, even if you haven't utilized the construction funds yet. And it's like you're coming out of your pocket to do that and not aware of that. So I thought I'd throw that little 2 cents in. So fear of missing out, real estate corrections, and how hard money works, especially for construction loans, is just kind of a little bit of topic today. And I just wanted to point that out, especially for the times we're living in, where there's more than likely there'll be some kind of correction with the real estate market that we're in. How is that going to play out? At this point, I really don't know. I guess I found out everyone just keeps continuing to talk, and I listen to all talking heads and all people from having experience. But I tend to try to look at people who are a little bit older, who've had experience through 2008. Maybe a Ken McElroy from Rich Dad Camp, or people who just, a lot of the new people talking about real estate, they just have not experienced going through that 2008 crash. And if you were operating at a higher level, doing a number of deals, and when banks started to cut lending and things became tight, a lot of companies went out. People who had experience, a lot of businesses were affected, including myself, and firing employees and and having to change everything that you do. So be mindful of that. And I threw my little 2 cents in about the hard money loans as well, for people who are not aware of that. If this video has been any value to you, see you, subscribe, leave some comments. To my next video.